Crypto is about a lot more than just Bitcoin going into next year. I've been talking to some of the top CEOs and investors in the space. Regulation is really the big thing they're watching. There's also a focus on building applications on top of blockchains. Some call that Web3. There's new uses for NFTs. They're looking at Bitcoin adoption and a brain drain, as they call it, from big tech. This year really laid the groundwork in D.C. for crypto, especially with some of those recent hearings. Expect Treasury to pay a little more attention to stable coins and financial stability surrounding those, crypto-specific bills, some updates on a central bank digital currency, and a push for a spot Bitcoin ETF. On Web3, some expect some tension between Silicon Valley companies like Meta and some of the more native crypto startups, which are trying to build decentralized versions of those social networks and their own metaverse. NFTs, meanwhile, are really evolving beyond art into things like club memberships and assets for within video games. So keep an eye on that as well. And heading into next year, there are still questions over which blockchains developers will choose to build on. It's really been Ethereum so far, but some challengers like Solana and Avalanche, for example, are becoming viable options as well. For Bitcoin, keep an eye on sovereign adoption after El Salvador's moves. There's cross-border payments as well through the Lightning Network. And finally, institutional adoption. And about that brain drain, industry CEOs tell me they're seeing floods of job applications from tech companies and from Wall Street. Joe.
All right, Kate, thanks. Joining us now for her outlook on what is ahead in crypto markets, Meltem Demirs, CoinShares Chief Strategy Officer. There's always nuance. So I'm trying to figure this out. So it's at 49,000. Wow, up 66% from January. Nice. Down 30% from November for people who bought. So it totally depends on where you entered, right, Meltem? That is volatility, which may subside in 2022, I guess.
Absolutely. First of all, Joe, we got to talk about your chart. We need to update this going into next year. As Kate said, there's a bunch of new layer one blockchains, including Solana, Avalanche, Luna, just to name some, that have now made their way into the top 10. We're seeing a sector rotation, and I think we're seeing a big shift in the blockchains that people are building on. But going back to Bitcoin, Bitcoin had 17 weeks of consecutive inflows in structured products. We reached an all-time high of 80 billion in global AUM in those products. And last week, with that volatility, we saw for the first time ever over $140 million in outflows. This week, we're back to seeing inflows. So volatility certainly has been the name of the game this year. But if we zoom out and we look at not only Bitcoin, but the crypto asset class overall, what we've seen is two key trends. One, we started the year at under $1 trillion in market cap, ran up to 3.5, and we're now at around 2.5 trillion of total market cap. So that's a pretty big sector for cryptocurrencies. It's about a third the size of gold as a market. And then in addition, the second trend we've seen is increased financialization. We have institutions who shunned Bitcoin in 2017, 2018, now openly coming out and building Bitcoin products, building crypto investment products, and integrating with crypto markets, which is a pretty exciting trend.